Good morning, MegaWhale team, and welcome back to the channel. I hope you're all having a fantastic day. In today's video, we are doing a comprehensive macro and short-term analysis going over the recent continued correction to 112,000 and this subsequent short-term bounce. So we are going to be taking a look at exactly what is happening here, discussing what the buyers need to do to continue to push the price up and the exact point in which the buyers will take full control. We'll also be discussing the macro charts and the potential for a further correction toward the downside, the key levels of support, the triggers on the weekly chart, including our 62.09 on the RSI, and of course the total altcoin and cryptocurrency market. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can join us on Telegram with the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in joining our VIP channel, you can click the pinned comment of the free channel, contacting our admin by clicking this name, checking out the 54 plus month trading track record, or watching a 10-minute video showing you inside the VIP channel. You'll get access to trading setups with the exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more, including access to a variety of group chats, from the general chat to the trading chart and education chat to the help, the news, community setup, and coding and indicator chat. Check it out, guys. We'll love to have you in there, and let's jump on in. So as we can see, over the past 24 hours, Bitcoin continued to correct toward the downside after the daily breakdown of that major monthly uptrend spanning back since the beginning of April at around 74,000. Over the past 24 hours, with that continued breakdown, Bitcoin retested a prior levels of sell-side liquidity, being that of around 112,000, just above that major break of structure support at around 111,900. And since then, we have seen some short-term momentum shifts, and we have actually seen a short-term bounce. In today's video, we were discussing what this bounce means. Is it actually enough to push the price higher? And we'll be talking about the exact point on the chart where the buyers fully regain control of this price action. Until then, the price is very much still in an overall downtrend. Of course, we'll also be taking a look at all of the other stuff we mentioned in the intro today. Let's start on our market data. 24-hour volume is up 3.84%. This is sitting a little bit on the higher side, but not too extreme, of course. 350 billion in total volume is kind of that mid-range volume we see in the week, is slightly pushing toward the higher side here. Again, with volume pushing up, we see a little bit more volatility. Liquidations are down 38%, which is surprising considering the 350 billion in volume. We do have around 345 million in liquidations, 125 million coming from longs, 219 million coming from short. So around about 2/3 of those coming from short positions as Bitcoin and Ethereum takes a little bit of a move back toward the upside. Moving over to the DXY, not too much movement here for the DXY, more or less just pushing sideways, sitting at 98. Again, the key levels we are watching, trigger points for continuations toward the upside, is simply going to be that 100 change of character level. If we break back above that region, we'd expect continuations on the macro up to the midline. Until then, we are, of course, in a downtrend, and of course, we are expecting potential lower targets, 93 to 92, depending on how interest rates are cut. The S&P 500 did look like it was making a local top, and I will stand by that point. At the moment, it does appear like the S&P 500 is creating a local top. We have seen a bearish divergence. We have seen a break back below the break of structure, confirming a local top and deviation, and we have actually pushed now into this higher time frame uptrend we discussed as a first target in our prior video. We told you guys that the breakdown of the break of structure would result in a correction to retest this uptrend, and if we lose this uptrend, so we see a continuation over here dropping below this uptrend, it is highly likely we come just below the 50 EMA to retest this 6,250 level. So the overall bias swing at the moment is still going to be short-term bearish. I'm looking for pullbacks into support here. The overall higher time frame trend, while above this trend line, is of course bullish. And if we're looking for steep and aggressive corrections, do not expect those to occur unless 6,250 is lost, as this is a high time frame level of support where reversals back up could definitely develop from. So if you're looking for high time frame bearish flips, I'd be expecting that below this high time frame support for corrections to the 200. But until then, worst case scenario, we see a continuation to 6,250 upon the breakdown of this uptrend. Best case scenario, we are able to sustain above the uptrend, breaking back above the prior break of structure, being that of the bearish invalidation. So if we get back above this 6,470 level, we will expect continuations again into new highs. So all in all, watching that short term, definitely some weakness developing, definitely some selling occurring, definitely a potential short term top developing, but that trend we are in is just hanging on by a thread still. So watching that moving into the new week. That is it for the broader markets, guys. Let's go ahead and jump into Bitcoin. Now, before we get into it, make sure to go ahead and sign up to BitGet, BitUnix, and BingX, the exchange links down below. You'll go ahead and support me making this content on a daily basis by doing so. Trading on exchanges I use and I trust. You'll get a lifetime trading fee discount of 15% of all your trading fees, which will build up to 45% based on your trading volume, which is by all means a massive incentive. And of course, you'll get access to all of the bonus monthly exclusive campaigns we run on BitUnix. Just by signing up, of course, you can get access to a whole variety of bonuses. We've given away over 100,000 US dollars in bonuses already in the last 2 to 3 months just from that. And of course, we run these campaigns every single month. So you get your 15%, you'll get access to all the campaigns we run, which is basically bonus rewards for free just simply by trading. And of course, you'll support the content. Check it out. We'll play an ad and we'll jump back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's get back into it. And I want to start on the total cryptocurrency and altcoin market cap and then jump into Bitcoin. There is so much to be taking a look at today, but let's start on these markets. And I want to start on the altcoin market. Now, I did a brief update in Telegram yesterday and on Twitter discussing, again, the total market cap, discussing the altcoin market over here, but the primary focus was that the altcoin market had come back down to retest the $1 trillion level. We talked about how the $1 trillion level is a major 2-month-long uptrend spanning back since mid-June, and losing this level would result in a continuation down for the alt market. However, while this level holds as a short-term support, bounces are something we are watching for. We have seen a bounce here for the altcoin market directly from that $1 trillion level, and everything else we said in that post and what we've been talking about still remains very true. The $1 trillion level is a massive, important level of support, and it lines up with that point of confluence, which is that multi-month uptrend. Losing this low at 1 trillion will be the nail in the coffin that results in a correction back down to 940 to 920 billion for the total altcoin market. So you're looking for the next aggressive move down for the altcoin Bitcoin market, that will come upon the loss of the $1 trillion level. Now, when we're looking at the overall trend for altcoin market is up. So while we are in this uptrend, it is expected that Bitcoin dominance will still slightly be bleeding. Now, if we look at Bitcoin dominance, we can see that is still the case. We are still slightly moving downward here on the short term for Bitcoin dominance. And best case scenario, if we see the market recover, Bitcoin dominance could drop as low as around 55 to 54%, the sell side liquidity over here, which would be our bearish target for Bitcoin dominance, which could facilitate a little bit more rotations moving into altcoins, which would do one of two things. If the total market cap is moving up and we'll see Bitcoin dominance go down, the altcoin market will perform greater than Bitcoin, the Bitcoin pairs. But if the total market cap is going down and Bitcoin dominance is also going down, we will still see the altcoin market pull back, but it won't pull back as aggressively as opposed to what it would do if Bitcoin dominance was moving up with the total market cap moving down. So that means at the moment, what this represents to us with the altcoin market being the more speculative component of the cryptocurrency market, with Bitcoin dominance still dropping, it signifies to us that there is still a lot of potential and hope. And I don't mean potential and hope in terms of opportunity. I mean, people, retail, are still viewing the market as opportunistic, and hence why we are seeing the altcoin market in terms of the cryptocurrency market cap, the altcoin market cap, sustain relatively well in comparison to when we're looking at Ethereum dropping from 4,100 to 4,000, we're looking at Bitcoin dropping from 124,000 to 112,000. The total altcoin market cap through all of that is only down around 700 billion. Well, around about what are we looking at? 70 billion. Sorry, my numbers are completely off. About 70 billion, which isn't actually that much in terms of the total cryptocurrency market cap, especially for altcoins. So when we're looking at the altcoin market, guys, we'll stand by the same thing. The altcoin market is never leading. It's not a leading market. It is reactive in terms of what Bitcoin is doing, and we can kind of derive how it's going to perform when we look at Bitcoin dominance in reference to the total cryptocurrency market cap. So in all we're not going to predict where it's going to go in terms of right now. We will say that when we break 1 trillion, we expect lower. While we are sitting above, the altcoin market will be able to buffer any sort of move, even if that move comes down for the cryptocurrency market, provided Bitcoin dominance continues downward. When we move over to the cryptocurrency market cap, this is where we can get a little bit more predictive with our assessments. When we're looking at the trend has been positive since that 2.3 trillion, which lines up with 74,000 for Bitcoin. Of course, we have seen Bitcoin already break down its RSI. We've seen Bitcoin already break its trend line. Now, the total cryptocurrency market cap is made up of the altcoin market as well. The reason why the total cryptocurrency market cap has not gone ahead and done these things that Bitcoin have done is because Bitcoin dominance is dropping. So we are seeing the market sustain slightly in terms of total market cap from the side of Ethereum and the side of the altcoin market. But if we see that flip again, we will see these corrections take place. In terms of the altcoin, the total cryptocurrency market cap, if we're looking for leading signs of continued market-wide corrections, particularly for the altcoin market, weekly RSI breakdown will be the trigger for the price correcting back to 3.63 trillion. And we know 3.63 trillion is the trigger for corrections potentially as low as 3 trillion. So we get back below this trend line, similar to the uptrend here for the altcoin market, and the $1 trillion level being confluence, the 3.6 trillion and the uptrend is the confluence of the total market cap for corrections lower. Provided we remain above this level, the hope for continuations upwards are still there. The potential for market-wide reversals and continuations upwards are still there, but the probabilities are diminishing and have been diminishing significantly with Bitcoin dropping. Now, if we want to see the market continue aggressively upwards, the key level we need to break above for the total market cap is going to be this weekly high. Now, we discussed this in our prior weeks. Even prior to this aggressive wick, we talked about 3.94 to 3.95 trillion being the resistance. We need to close a weekly candle above to signify a continuation. We have not yet had that, and it doesn't look like we are having that currently. So we need to see a weekly close above that level to be confident that this wasn't a local top, and we're going to see continuations upwards. Until then, corrections into support is more probable. That is it for the broader markets. Let's jump over to Bitcoin, starting on the higher time frame. As you already know, guys, the higher time frame charts of Bitcoin. And I just want to say this, the high time frame chart for Bitcoin is going to be different based on the time frame you're viewing it on. I think a lot of people get in their head about, oh, the trend is bearish or the trend is bullish, but they don't contextualize what that means based on the time frame they were viewing. If you're viewing Bitcoin on a monthly chart and you say it's bullish, that doesn't necessarily mean you can't be bearish on a daily chart, right? You can be bearish or bullish. You can have different biases that span different time frames. And that is very much the case with Bitcoin right now. Even though Bitcoin is macro bullish on a monthly and weekly chart, it doesn't mean we are not starting to see some weakness and bearishness develop on the smaller time frame. One of the key leading indicators for that is going to be momentum. And we've talked about the 62.09 on the RSI in our prior video, and we've talked about a lot on the channel, and that is because out of the total amount of times we've seen the breakdown of the 62.09, I believe it's been, I think 12 times now, or 13 times, I can't remember off the top of my head. Only 2 times on the weekly, when we've closed below the 62.09 on the weekly, we have not seen corrections for Bitcoin that have been greater than negative 10%. So I'll say that again just to make it very clear. 10 out of the 12 times we have seen the weekly RSI close below 62.09. The close happens in 4 days, okay? The close is the key point. Not right now, we haven't broken down. We are under, but we need to close below. 10 out of the 12 times we have seen corrections for Bitcoin greater than negative 10%, spanning back 11 years, okay? So now that is a significant bit of data, no matter the probabilities. Now that isn't 100% accuracy, right? Nothing is ever 100% accurate. In fact, it invalidated back over here in June. We saw another point. We went from 1 to 2 failures. Back in June, we saw a breakdown. We didn't see a correction greater than 10%. I think we saw about a 7% pullback. And the last one was back in 2020, I think. 2020, August 2020, we saw the other failure where we didn't see a negative 10% correction. But, nothing in trading is 100% certain. These trigger points aren't meant to be 100% certain. What they're meant to allude to you is that a significant momentum shift is occurring on the high time frame. Now, remember, momentum, indicators, they are derivatives of the price action, and the price action is a reflection of buyers and sellers' decisions in real time. So we're seeing buyers and sellers' decisions in real time represent weakness. We can derive that weakness from the indicators such as momentum. So it's a reflection and a indication of how the market is perceived to be performing at any particular period of time. We can use those assessments to gauge the overall strength of the market and thus assume where the market is likely to move to in the future. So all of these things, indicators, price action, is all connected, they're all one. They're not separate, they're not predicting each other. They are it's a reaction, it's a representation of one another, it's a derivative of the price itself. And again, the price is made up of real-time supply and demand, people buying and selling at any particular moment in time. So when we're looking at this, we have to take it at face value to some degree. We have to understand its importance and significance, and at the least, we need to be aware that historically it's had a pretty good success rate, and that doesn't necessarily mean it's going to work out this time, but statistically, there's a probability where it may. So we need to be aware of that at the very least. Let's move over now to the short term. So as we can see, guys, Bitcoin has broken below this multi-month uptrend. This has spanned back since April. In fact, we've had 2 very distinct trends this entire year. We had a very distinctive downtrend spanning back from January all the way through into April. We broke that distinctive downtrend. And guess what? We saw a distinctive uptrend initiate from April up until a few days ago in August, where we broke down again. So we have actually broken into a downtrend here. Now, whether or not this downtrend will sustain is the question we are going to be discussing, because sometimes what we can see is downtrends break or uptrends break, the price absorb the selling and then continue back up. And there's a real potential for that. So let's discuss the horizontal point of no return. Essentially, the point of support where if broken, there is very, very little chance that the buyers will be able to recover the price action. And that point of support is sitting at 111,900. If we look at the price action, we have a much, much broader potential horizontal level, which is 111,900 as represented by, again, the break of structure initially, the retest low on the 3rd of August, and now a potential horizontal low again on the 11th. Our top being the top in July and the deviation from range at 123,000. Therefore, if we break below 111,900, the measured move of this horizontal consolidation would be a correction into 100,000. No surprise, guys. It takes us exactly to where we have been warning about on the daily chart, which is the potential worst case scenario for Bitcoin is a correction into 98 to 100,000 our sell side liquidity. That is worst case scenario for Bitcoin. This is if this horizontal support does not hold. This is if the total market cap breaks below its major uptrend, has a momentum shift, the total altcoin market cap breaks down. Worst case scenario, we potentially see a correction to 100 to 98,000. Now, again, for us to be confident on that move, we've had numerous triggers. Trigger number one, the initiation of our bearish expectations formed, and if you've been paying attention, formed upon the loss of the break of structure. The loss of the break of structure was when we expected corrections to take place into the uptrend. The rejection from the uptrend was when we expected corrections to take place into 111.9 to 112,000. We have seen that both times. We have seen those corrections play out perfectly. Now we expect again the loss of 111,000 to be the trigger point for a much broader and extended correction, potentially to 100,000. So that is worst case scenario. Let's talk about what the buyers need to do to eradicate that as a possibility, because right now that is the trend, that is the expectation. We are going lower unless this can happen. So for the buyers to reverse this trend, we need to see prior lower highs break and reestablish as support. The key important one is historical resistance becomes support, historical support becomes resistance. So historical support becomes resistance, historical resistance becomes support, failure to sustain the support becomes resistance. For us to be any bit confident the price will reverse back upwards and avoid the potential breakdown, we need to break back above 115,800 to 115,900. Until then, the potential risks for continuations down are very much present. Thank you for tuning in, guys. Have a fantastic rest of your day. I'll catch you all in the next one. See you then.